Hello, my name is Mike Sinibaldi and welcome to this week's video edition of Heard on the Street. In this edition, I'm going to take a look at the following markets: the S&P, Euro-US dollar pair, gold, and crude oil. The first market we're going to talk about is the S&P. The last time we spoke, I presented this chart on Friday where wave 4 completed at 1285, just shy of the 0.50 retracement of wave 3. If this interpretation is correct, then the downside target should still be reached next week in agreement with the cyclic observations I made in my 3/11/2011 video. If you already haven't done so, I highly recommend that you review that video before proceeding to the intraday charts in this video. The link has been provided in the body of the text of this week's edition of Heard on the Street. Turning our attention to the intraday 120-minute chart, notice that the rally from 1243.25 has developed in a three-wave structure, A, B, C, that has been contained within parallel lines. As long as price remains within the channel, the higher the probability that the move remains a correction that will eventually be negated by a new low. Also note that the most recent decline to 1270.75 has overlapped wave A, a classic counter-trend signature. While it is possible that the wave structure will morph into a more complex pattern, as indicated by the alternate wave count, a decline below 1261.50 indicates that wave 4 was complete and wave 5 of wave 1 is underway. As a reminder, any advance above the wave 1 crest of 1292.50 would negate this bearish count. The next market that I'll cover is the euro dollar. At the weekly chart level, notice that every wave structure on this chart is in three waves. The advance from 128.52 has developed in three waves, and we could see a test of the most recent high of 142.82 and the descending trend line established by the two previous peaks next week. Should a breach of 142.82 occur, one would expect the price would challenge 144.30 or 143.45, where wave C equals wave A of the recent swings. A, B, C, or A, B, C. Also note the 0.786 retracement comes in at 144.45. Should 142.82 hold, then I'll be looking for weakness and a retest of 128.52. The next market I'm going to cover is crude oil. At the weekly chart level, I believe that wave 4 red completed at 96.225 and another up-down-up sequence is required to complete the larger degree wave structure where wave C equals wave A at 120.175. Prices must hold 96.225 for this interpretation to remain valid. The final market that I'll cover in this week's edition of Heard on the Street is gold. Just like crude oil, the weekly chart level shows that wave 4 red completed at 1307.60. Last week's trade was interesting because gold dropped $36 on Tuesday, creating an unconfirmed bearish MACD cross that got traders bearish. You could see evidence of that where price broke below the MACD predictor, then closed above it by the close of the week. Traders that anticipated the signal got burned, as the signal was no longer valid. With a nest of buy stops above 1446.60, odds are that traders will hunt those stops and propel the market up to my final target of 1530. I hope you found this video helpful and best of trading.